How's it going today, guys? Welcome back to the channel. So in this video today, we're going to be talking about monthly dividend paying stocks and a number of the ones that are on the list of many people, including myself, as some of the best monthly dividend payers out there. So if you're new to my channel, you may not know my history at all, but I am hugely into dividend investing, and I've been growing a dividend portfolio on this channel for about a year and a half and updating you guys every single step of the way. So if you've never seen me before, there's a ton of information there, guys. I'll put the very first video for that series up in the corner, wherever that button is going to be, and you can definitely check that out. But I've been a successful dividend investor for the last year and a half. And although I personally do not own any monthly dividend paying stocks, I certainly do understand why some people seek these out and why there is a demand for information on them. So that's exactly what we're going to be putting together here. And of course, the main reason why most people like dividend stocks is because you're able to get paid in two different ways. Number one, you get those typically quarterly cash dividend payments to your brokerage account, which you can of course reinvest to earn compound interest, but you can also make money if the underlying share price goes up while you own it. However, most dividend stocks out there are only going to be paying you on a quarterly basis. And some people, they just want more dividends. They want more than 4 per year. They're saying, give me more dividends. And if you're one of those people, that's what these stocks are. They're going to give you a dividend every single month, assuming that that payout does continue. But we're going to talk about many of those factors that may affect it. Also, guys, I've been covering dividend stocks and dividend investing for a long time on this channel, so I'm going to put also in my corner my ultimate dividend investing guide video. It's about 50 minutes long, so we might breeze over a couple of topics here, but we go into a lot more detail about dividend investing, dividend safety, all kinds of stuff like that over in that supplemental video. Now, that being said, guys, before we start the video formally, I just want to be respectful of your time and make sure that you are in fact in the right place. So here's what we're going to be covering in this video. First of all, why some companies decide to pay dividends monthly rather than quarterly, and are there any advantages to that? We're also going to cover the exact metrics that you'll want to monitor if a monthly dividend stock is on your radar, showing you what key metrics to keep track of. We're going to cover the key indicators that a monthly dividend company will need in order to continue growing year over year, and of course, 10 of my favorite top monthly dividend stock picks. Again, guys, full transparency, I don't own any of these in my portfolio, but there's no reason that I don't. There's nothing against them. I don't dislike these stocks. I just haven't yet found a monthly dividend payer that I have decided that I need in my portfolio. What we're going to find out as we go is that real estate is a big component of these monthly dividend payers, and I already have tons and tons of real estate exposure through the 2 properties that I already own and my crowdfunded real estate investment. So it really just comes down to a portfolio preference and an asset allocation mix. I just personally don't need any more real estate in my portfolio at this time. Also, guys, we're going to be covering the crucial steps you need to follow when buying monthly dividend stocks, as well as the biggest mistakes to watch out for. That being said, guys, I do have a few small asks for you. Number one, if you are watching this on your computer and you got a cell phone next to you, just go ahead and silence that, because there's a lot of information to cover here, guys. It's kind of like a miniature college course, so, treat it like that and commit some time to this here, and you're not going to have to jump around to like 20 different videos. I can promise you that. Also, you might want to grab a drink. Pen and a paper would be useful as well. And then real quick, guys, 2 more things to mention. Number one, I am giving away another pair of the regular AirPod headphones. If you want to learn about how to enter, stick around later on in the video. I'll tell you how it's done. Also, guys, a few quick disclaimers. Number one, I am not a financial advisor. This is not any kind of financial advice, and this video here is for entertainment purposes only, and you should always do your own due diligence above and beyond the information in this video before making any decisions to buy or sell stocks. Also, there's been a ton of scam comments down below lately, guys, so just be careful. I'm never going to ask you to like send me money or anything like that. So if you see any scams, please label them as a spam or a scam comment just so others do not fall for it. Anyways, there's my long-winded introduction. That's why I do table of contents, guys. You can skip ahead at any time down below for future reference. But anyways, guys, let's jump right into it and get to the topic of dividends. So as mentioned earlier, I have that full 50-minute video on dividend investing for beginners. So I'm not really going to get into much about dividends here. I'm just going to pop that video in the corner for your viewing pleasure. However, more specifically, let's talk about monthly dividend paying stocks and what factors you should be looking at if you're considering making an investment in one of these companies. So number one on my list here for criteria would be a diversified company with consistent cash flow. The number one most important factor for a monthly dividend stock is consistent and predictable cash flow. That way they can continue paying that dividend out to shareholders. That is why we see a lot of real estate in this area, because that is a consistent means of monthly cash flow. And a lot of people draw the similarities between monthly dividend stocks and kind of like earning a rent check from a rental property. So that's factor number one. After that, we want to look for long-term profitability and growth expectations. Typically, I look to see growth of earnings anywhere from 5 to 15% per year, and you want to pay attention to the 5-year trend line to make sure this is a long-term trend, not just a short-term one. Now, with the whole COVID situation, obviously there is a lot going on in the markets and a lot that happened that is just once-in-a-lifetime events. So you may have to consider that in the back of your mind when looking at a lot of these numbers, because pretty much no company out there had an unaffected trajectory of what they were looking to do when COVID hit them. So keep that in the back of your mind. Beyond that, we look for well-established companies. Not many monthly dividend companies are above the $10 billion market cap. And so that can be one of the issues here, or the risk factors to consider is, you are investing in smaller companies that, other larger investors may have simply passed up for one reason or another, or they may just not be on their radar. Another huge thing to look at is that dividend track record. Make sure that they have not cut the dividend. It's good to see them growing the dividend. Those are all good things to see. Beyond that, lower debt loads are always a positive, so take a look at the debt load of the company, especially any long-term debt, because that can be a slippery slide for a company if they come into a bad debt situation. After that, I would recommend taking a peek at sector trends and figuring out how is the surrounding industry moving, because I always like to have some sort of larger trend behind an investment that I'm making. So I'd always want to be investing in a company where the industry or sector has good growth prospects. We also want to take a peek at that all-important payout ratio, and I typically like to see a payout ratio between 65 to 85%. That means that the company is sharing a good amount of their profits with investors, but not so much that they simply can't afford it. And then also consider that dividend yield. However, this is the least important metric on this list, because that really doesn't tell you much without considering outside factors. Because at the end of the day, if a stock went down 50% in value and it was paying a dividend, well, all of a sudden that dividend yield would double. So people might look at that and say, wow, that's a phenomenal dividend yield. But you got to ask yourself, if the stock just sold off 50%, why did it do that? Why would a stock sell off that much? That means there's trouble of some kind. So always watch out and consider that dividend yield to be like one of the final factors that you look at, even though it's the most sexy one that, we all want those high dividend yield stocks, but they can oftentimes be a trap. Now, when it comes down to where to actually buy dividend stocks, I, of course, use and recommend M1 Finance. It's commission free. They also do not have any type of management fees. There's pre-built portfolios you can invest in for free, or you can build your own. They have a portfolio level dividend reinvestment. You can put those dividends right back to work. And if you guys are looking to learn how to get started, I have a completely free 30-minute video training that walks you through step by step how to get started with M1 Finance. And coincidentally, that's how you can win these AirPods right here, guys. In the next 30 days, I'm going to pick one person who signs up for that training, and they're going to win a free pair of AirPods. I've already had a couple of winners in the past. I'll throw a screenshot up on the screen here just for legitimacy reasons. I am 100% giving everything away and keeping track of all of it, guys. So these are real giveaways with real winners. And of course, guys, I am affiliated with M1 Finance. So if you do decide that you want to sign up for them, feel free to use that link down below as a way to give back to me at no additional cost to you. And that training is going to be ryanoscribner.com/M1-training or the very top link down in the description below. So that's a gist on what to look for in monthly dividend paying stocks, as well as where I personally buy my dividend stocks. Now let's jump into my M1 Finance portfolio and take a peek at my top 10 monthly dividend paying picks. Alrighty guys, so coming in at number 10 on my list here is a stock that used to be a monthly dividend payer, but because of the whole COVID situation, they actually had to suspend that dividend. However, I still wanted to include them on the list because number one, the stock has been doing phenomenal in the short term. They have great prospects behind them in terms of the reopening of the world, and they are very tied to the hospitality segment. So let me go ahead and read you guys the profile here on this stock, and then we'll talk about it a bit more. So the Apple Hospitality REIT is a real estate investment trust. That basically means a publicly traded company that owns a ton of real estate, basically like real estate trading on the stock market, and it owns one of the largest and most diverse portfolios of upscale rooms-focused hotels in the United States. Apple Hospitality's portfolio consists of 233 hotels with more than 29,000 guest rooms located in 88 markets throughout 35 different states. The company's portfolio consists of 104 Marriott-branded hotels and 124 Hilton-branded hotels. So they don't pay dividends right now, but if you look at the stock here, guys, over the last 3 months, this stock is doing quite well, up 15%, and even over the last 6 months, up 28.69%. And if we look at the last 5 years here, guys, in my opinion, this thing has a lot of room to run here as we're just now coming back to our pre-pandemic levels. However, if you're dead set on companies that are paying monthly dividends right now, we're going to cross that one off the list and move on. So next on the list here is Prospect Capital Corp. Let me go ahead and read that profile there, and then we'll talk about this company a bit more. Prospect Capital Corp is a business development company that focuses on lending to and investing in private businesses. Prospect's investment objective is to generate both current income and long-term capital appreciation through debt and equity investments. So if you want to get involved in a company that is doing private business lending and pays a monthly dividend, that is what you have here with Prospect Capital Corp. So a couple things I like about this company in particular is that they are involved in a well-diversified collection of companies ranging from auto parts companies, healthcare providers, food distributors, and media companies. So they're well diversified across a number of different business segments in terms of who they are actually lending to. A big concern would be if they had all of their eggs in one basket and then that particular industry had a hiccup. That could definitely spell trouble for a company like this. Also, their general focus is working with credit-worthy middle market companies. However, despite the dividend yield being attractive at 7.5% right now, they are at a 100% payout ratio, which means that if they're not making more money in the future, they're paying out all of their money that they're earning back to the shareholders, and that is just not sustainable in the long run. So that is a red flag for sure on my list here. Not to mention, in the last decade, they have had to cut their dividend on 2 occasions. Now, in terms of the actual share price here, guys, obviously the pandemic hit this company pretty hard, but they have been doing really well overall over the last 2 years. They're up 76.99%. If we look at the last 5 days, they're up almost 8%. Over the last month, up 12.83%. Over the last 3 months, up almost 31%. And over the last 6 months, up an astounding 78%. So it is a high payout ratio, but it is a solid dividend. The company's doing well here, and the share price has been doing phenomenal. So definitely one to consider for further research. Hey guys, real quick, I want to tell you about a brand new platform that I have been working with lately. Firework is the world's first web story CMS, enabling small businesses to tell big stories through immersive, short video-focused experiences. So we all spend hours a day on TikTok or Instagram watching vertical videos. So the question is, why can't your website do the same exact thing? So we personally rolled out web stories from Firework over on the personal finance blog that I own a part of called investingsimple.com, and we've had fantastic results so far from our readers. I've also created my own Firework channel if you guys want to check that out. It's going to be 30 to 60 second digestible versions of my most popular videos, and there's already a few dozen over there. So if you guys want to check that out, the link is going to be fw.tv/Ryan Scribner official, or it's going to be the link down in the description below. So number 7 on my list here is Broadmark Realty Capital. Let me go ahead and give you a summary here from the site. Broadmark Realty Capital Inc. is an internally managed commercial real estate finance company that offers short-term first deed of trust loans secured by real estate to fund the acquisition, renovation, rehab, and development of residential or commercial properties. So they're basically involved in loans on real estate, another real estate related company paying monthly dividends. Now, Broadmark Capital has originated over 1,000 loans since launching in 2010, which is over $2.4 billion in loans. And also, it's extremely unique for this company to be a REIT that carries no debt, seeing as most REITs out there load up on a ton of debt to then purchase cash flow producing properties. It's kind of the exact opposite of the status quo here among other REITs. Every single one of their properties has been bought with cash from the balance sheet, so if you like companies that don't use debt, this could be a solid one to consider. Across all of their properties, the average loan to value sits at 60%, which is pretty high, and gives them a good barrier of safety in terms of if there was a market downturn, they still have a lot of equity in these properties. However, despite having an attractive 6.87% dividend yield, most recently that payout ratio was at 112%, which means they're paying more in dividends than they are even reasonably able to afford. And so if something doesn't change, they are going to have to most likely restructure that dividend. Also, guys, there are a few negatives to talk about here with this company. They only IPO'd in late 2019, so you won't hear about this stock in a lot of other places. Not to mention there is a lack of geographical diversification or loan type diversification, so they have a lot of eggs in two baskets of a certain geography and a certain type of loan structuring. Beyond that, many residential properties are in the Pacific Northwest, which is an area that a lot of people are moving out of. They're also making a lot of construction loans, which can get pretty hard during a recession, and at the end of Q1, over 14% of their loans were in default. So there's a lot of risk factors to consider here. However, based on the fact that they're buying properties in cash, that definitely is a positive in terms of risk mitigation. So if we take a look at the stock here, guys, over the last 3 months, it's up about 9.6%. Over the last 6 months, about the same. And if we look at the last 2-year chart here, guys, it's honestly been a pretty boring investment, not too many ups or downs, except for what happened there during the whole pandemic. Okay, guys, coming in at number 7 on my list here is Gladstone Investment Corporation. Let me go ahead and read you the profile here about this company. Gladstone Investment Corp. is a publicly traded business development company that seeks to make secured debt and equity investments in lower middle market businesses in the United States in connection with acquisitions, changes in control, and recapitalizations. So there's a lot of common themes here. A lot of lending businesses, a lot of business-to-business businesses, and a lot of real estate businesses in the realm of monthly dividend payers, because these are the types of businesses that have that consistent cash flow that's required to be a monthly dividend payer. So a bit more information here on the Gladstone Investment Corporation. This is, of course, a BDC business development company focusing on lower middle market companies in the range of $20 to $100 million in revenue. They are diversified across multiple consistent sectors, including manufacturing, as well as business services and consumer products. In 2020, that was a really rough year for Gain. Revenue dropped 15% and free cash flow down 96%. That's not something you want to see, especially from a stock that's supposed to pay you a dividend every single month. However, things have improved significantly since the whole pandemic situation. Right now, they're sitting at a 5.57% dividend yield and a 93% dividend payout ratio. It's a little bit higher than I like to see. However, it is still something they could afford for some time here as they're able to hopefully grow revenue. Now, if we take a look at the actual share price here, guys, over the last month, this stock is up 6.63%. Over the last 3 months, up about 23.5%. Over the last 6 months, up almost 47.5%. And if we look at the last 2 years here, guys, we're just now getting back to where this stock was trading back in 2019. Obviously, a massive correction there with the global pandemic, and then another sell-off for this company, and really things only started looking good for them at the end of 2020. So that is the other stock here on my list for monthly dividend payers. Now, the next stock on my list here is a Canadian company. It does not trade on the U.S. major exchanges, and it is unavailable via M1 Finance. However, I do want to talk about it because, number one, you could buy this stock on brokerages like Charles Schwab, for example, and there are a lot of Canadian viewers, so shout out to you guys. I see you there, so let's cover this one for you. So TransAlta Renewable is looking to challenge the status quo here by being a monthly dividend paying stock. Renewables are not known for being recession resistant. They've had boom and bust cycles in the past, and most of these stocks do not pay dividends, and TransAlta Renewables is looking to challenge this and do exactly that. They are diversified. So this company has a diversified asset base across wind, natural gas, hydro, and solar, and over 90% of the cash flow is from wind and natural gas. They are geographically diverse with over 40 properties across Canada, United States, and Australia. Now, this company has potential here for strong internal cash generations to fund expansions into new assets. And with all of this talk around renewables, it's probably a decent, sector to have some exposure to. Now, right now, they're sitting at about a 4% dividend yield, which does appear to be safe for the time being. However, keep in mind, as we said in the past, the renewable industry has not been consistent over the long run. So do keep that in mind here. However, looking at the overall stock here, guys, it has done pretty well here, but over the last 6 months, it peaked out at about $18.91, and we've had a little bit of trouble getting back there. It has been on the up and up over the last year, and over the last 5 years, things have been looking good for this company as well. So definitely one to consider for some further research. So the next company on my list here is LTC Properties, not to be confused with the cryptocurrency Litecoin, but it is trading under the symbol LTC. So LTC is a REIT investing in senior housing and healthcare properties primarily through sale, leasebacks, mortgage financing, joint ventures, and structured finance solutions, including preferred equity and mezzanine lending. Very, very complicated stuff, guys. I don't know much at all about commercial lending, so if you don't know much about that, you probably may not want to be involved in this type of investment. That's something I don't know a lot about, is these complicated debt structures with companies. However, they are involved in senior housing, something I'm personally bullish on. As we are seeing people live longer and longer, we are going to need places for all of our loved ones to live. So that is something that I certainly agree with, and that's why this company is on my list. So right here, guys, a crazy statistic. The number of Americans aged 65 and up is expected to double by 2050. And this company right here is providing housing and other types of facilities like senior housing, nursing homes, and medical-related properties for this exact demographic. They have reliable revenue and distributions to shareholders, and revenue has been growing at about 9% year over year, which is definitely solid. The dividend yield is coming in at 5.6%. With a 74% payout ratio, which seems very affordable. So overall, I like what I see here with this company. My only warning flag is there are some complicated debt instruments here and real estate structurings that you should be familiar with before you invest a lot of money into a company like that. If we take a look at the overall share price here, guys, over the last month, it is basically flat here or down about 3.5%. Over the last 3 months, down as well. Over the last 6 months, up just 5.14%. And if we open it up over the last 5 years, guys, there was a pretty nasty sell-off around the pandemic, and we still have not recovered to those pre-pandemic levels. So next on my list here is Horizon Technology Finance Corp. This is another company involved in lending. Let's go ahead and talk more about it. Horizon Technology Finance Corp is a leading specialty finance company that provides capital in the form of secured loans to venture-backed companies in the technology, life sciences, healthcare information and services, and sustainability industries. The investment objective of Horizon is to maximize its investment portfolio's return by generating current income from the debt instruments it makes and capital appreciation from the warrants it receives when making such debt instruments. So that's the gist of this company. Definitely involved in some exciting industries. However, let's talk more about it and some of my thoughts on this company. So this is another BDC or business development company that specializes in making loans to early stage companies, particularly in biotech, consumer tech, and media companies. I do like consumer tech, biotech, not a big fan of, and media companies. Yeah, I do like those companies as well. So the only thing I'm not a huge fan of there is the biotech component, just because I don't understand it, and I've seen a lot of people lose a lot of money with some of these early stage biotech companies that are in clinical trial stages, or even before that, where they don't even have a product that they can sell yet. I'm not a fan of that business model myself. That being said, they're currently sitting at a 6.82% dividend yield and around a 79% payout ratio, and it's only a $303 million company. Not a lot of people are aware of it, not many people talk about it, and that's why I wanted to add it to your list. Now, a few things to note here. Horizon Technology is a bit lower risk than many other business development companies because they are issuing secured loans with actual collateral behind them. There is rapid amortization schedule that allows them to redeploy cash quickly, and it keeps a good amount of capital on hand to basically take advantage of future opportunities. So super interesting company investing in some very exciting industries and also a unexpected monthly dividend payer. And then in terms of the actual share price, guys, over the last month, this company is up about 4%. Over the last 3 months, up 31.5%. And over the last 6 months, this company is up around 37%. And if we open it up to the last 5 years, we can see, as expected, a COVID-related sell-off and now a nice uptrend that started from back then. So coming in at number 3 on my list here is Main Street Capital Corporation. So Main Street is a principal investment firm that primarily provides long-term debt and equity capital to lower middle market companies. Where have we heard this before? I know, guys, there's just so many similarities between a lot of these companies. A lot of them are basically doing the same thing here, if we're being honest, okay? So they also provide debt capital to middle market companies. Main Street's portfolio investments are typically made to support management buyouts, recapitalizations, growth financings, refinancings, and acquisitions of other companies that operate in diverse industry sectors. Main Street seeks to partner with entrepreneurs, business owners, and management teams, and generally provides one-stop financing alternatives with its lower middle market portfolio. Main Street's lower middle market companies generally have annual revenues between $10 to $150 million, and Main Street's middle market debt investments are made in businesses that are generally larger in size than its lower middle market portfolio companies. So there's a gist on it, guys. Let's talk a bit about this company more and some other information about them. So for Main Street Capital here, guys, the average investment size in a company is $13 million, and they have invested in over 200 private companies. So small businesses were hit really hard during the pandemic, and this is a company that provides financing solutions and helps out these particular companies themselves. So they are still recovering in terms of the share price, but we'll cover more about that in a bit. Right now, they're sitting at a 5.73% dividend yield with a payout ratio of 98%, which is quite high, so it is something to be wary of. They typically pay a modest monthly dividend as well as 2 bonus dividends per year, which is another plus here. However, one thing to note is that they did cut the bonus dividends in 2020 due to the whole global pandemic, so that may also happen in 2021. However, if you are bullish on small businesses in general, which I certainly am, this is a company that can help them meet their financing needs, and as long as we're seeing more growth of small businesses, this company should benefit as as well. So in terms of the overall share price here, guys, over the last month, it's relatively flat. Over the last 3 months, up 14.97%. And over the last 6 months, Main Street Capital Corp is up around 35.6%. So coming in at number 2 on my list here, guys, is another REIT, and this company is called Stag Industrial. I'll tell you what, just based on that name, it sounds like they're doing something cool. Maybe not as cool as you think here, guys, but this is another REIT, real estate investment trust, focused on the acquisition and operation of single-tenant industrial properties throughout the United States. Very clear-cut business model, and in one sentence, you kind of get an idea of exactly what they are doing. So this is one of my favorite picks here on the list so far. So this is an industrial and logistics REIT. They own and lease massive single-tenant buildings. This is involving manufacturers, trucking companies, and then other large established tenants. Most of their properties are 100,000 to 400,000 square feet, and they include top-tier tenants with long-term 10-plus year leases, including names like Amazon, Ford, and FedEx, giving them very stable cash flow. Currently sitting at a 3.79% dividend yield and a 78% payout ratio, and revenue growth has been 16% year over year. They have 500 buildings across 40 states. Overall, I think it's a well-diversified play for income and growth. They're working with high-quality tenants, and it's a very simple, really easy-to-understand business. I do like Stag, and I don't own them at any point right now. I don't own this stock right now, but it is one I'll be considering in the future. If we take a look at the share price here, guys, over the last 5 days, it's up about 5%. Over the last month, it's about up 3.4%. Over the last 3 months, up about 17.7%. And over the last 6 months, up almost 30%. And then number 1 on my list here, guys, you probably guessed it if you know anything about dividends. My hair's going all crazy here, so I guess it's a good thing we're wrapping up this video. But this is the Realty Income Corp, trading under ticker symbol O. And oddly enough, one time I was just driving through California, and I just happened to drive by their headquarters, and I was like, oh my gosh, I've always heard of that company. I don't know, it's just weird to bump into like a company headquarters sometimes if you've heard of them for a long time. But anyway, more information here on this Realty Income trademarked. This is the monthly dividend company. Apparently, you can only say that about the Realty Income Corp based on that trademark. This is an S&P 500 company dedicated to providing stockholders with dependable monthly income. The company is structured as a REIT, and its monthly dividends are supported by the cash flow from over 6,500 real estate properties owned under long-term lease agreements with commercial tenants. To date, the company has declared 606 consecutive common stock monthly dividends through its 51-year operating history, and increased the dividend 109 times since Realty Income's public listing in 1994. Guys, there's not really any arguing that this is like the most popular, the most solid monthly dividend stock that most people should consider as part of their portfolio if they're looking for more real estate exposure. Also, guys, this is a much larger company, $26.3 billion. Another thing to consider here in terms of the size and legitimacy with this company. It's a lot bigger than other ones we have discussed so far. So right now they're sitting at a 3.92% dividend yield and an 85% dividend payout ratio, and they even increased dividends during the pandemic, and they've increased dividends for 27 straight years. They've also received over 90% of all rent payments during 2020, so not a lot of concern there in terms of their tenants not paying rent. Realty Income Corp is focused on freestanding single-tenant properties in prime locations throughout the United States, and the stock saw almost a 50% drop in March, which was largely a buying opportunity for savvy investors. So lastly, if we take a look at the share price here, guys, over the last month, this company is up 3.66%. Over the last 3 months, up 18.57%, about the same over the last 6 months. And if you look at the last 2 years, guys, this still has not come back to pre-pandemic levels at $80 per share. So it is a stock that still could could have some room to run. So there you have it, guys. Those are my top 10 monthly dividend stocks and a couple of reasons behind them. Like I said, I don't own any of these yet, but there are a few on that list I'll be keeping an eye on, and I may consider adding them to my portfolio down the line here as I'm looking to move some money around. The last thing I want to cover quick with you guys is a couple of mistakes to watch out for with monthly dividend investing. Number one, watch out for very small cap companies that might not be stable enough to maintain dividends. You also want to make sure you look at that dividend track record and make sure that they have a consistent track record of paying dividends. You also want to look out for companies with a history of cutting dividends. We did mention that with a few names on this list that is part of their history. You want to look out for dividend payout ratios of 100% or more. That is a red flag, meaning they are paying more in dividends than they're actually earning, and that's not sustainable for a long period of time. Watch out for companies with a short dividend track record, or don't be investing in a sector that is on the way out or facing significant regulations. For example, I don't like oil and gas. I don't invest there, and I don't ever plan on putting any money there. I just don't like that industry. I don't think it's going to do well in the long run here. That's an example of that, but you can make those decisions yourself on what risk factors that you see out there. Also, watch out for businesses that are not adapting to current trends or major changes in behavior. Other than that, guys, this is a solid list to begin some further research. So anyways, guys, that is going to wrap up this video. If you want to enter that running for the free pair of AirPods, all you have to do is click that link down below. It's going to bring you over to this page. You click this blue button, drop your name and email, and it's going to email you over my free 30-minute video training on M1 Finance. It's going to show you how to get started step by step, and it'll enter you into that giveaway for those AirPods, and I'll be contacting the winner via email. If you do want to sign up for M1 Finance, I also have that affiliate link down below, and if you're looking to learn more about dividend investing in general, check out that full 50-minute dividend investing guide we got up in the corner for you or down in the description below. But thank you guys so much for watching this video. Subscribe if you haven't already. That's the like button. That's not, I don't know, guys. I'm losing it here at the end of this video, I'll be honest. But subscribe, hit those buttons, do your thing, guys, and I will see you in the next one.